Welcome to ShortView Trading. This is your morning market hit for Tuesday, 23rd of March. What matters today for traders? Well, once again, bond yields continue to ease off from their highs, moving lower on the session yesterday, and with that further rotation out of cyclicals and into tech and growth areas of the US equity market. You can see the 10-year yield. It made a high on Thursday last week at 175, and since then it's been working its way lower with modestly lower highs and lower lows. And with that, the Philly SOX, for example, a key tech-centric index, was up 2.2% on the day yesterday and is back above its 50-day moving average. Equally, the Nasdaq 100 also rallied on Friday. It was quite strong yesterday, up 1.7% on the session and back up towards its highs from earlier last week. So while tech has rallied, the cyclical parts of the equity market have rolled over with bond yield. The Russell 2000, for example, has continued to move lower, down by almost 1% yesterday. The Nasdaq banks were especially weak yesterday, down 3.3% on the session and lower since their closing lower on March 12th. And there's a similar pattern in the S&P energy sector, which has also been rolling over since its local high, also on March 12th. So rotation within the equity market is happening. The key question is, how long will it persist for and what kind of rotation will it be? How will it lead the direction of equity markets over the next couple of weeks? We answer all of that in our daily trading publication, available on our website and to subscribers, but we also offer a free trial for 7 trading days. And in that publication, we make a 1 to 2 week explicit recommendation on US equity futures, long or short. And that view is really driven by the position of our short-term models, the signals we get from those indicators. As well as that, though, an interesting observation we're making today is that Bitcoin continues to work its way lower. It peaked in mid-March ahead of the S&P 500 and has since rolled over. It's down about 6% overnight, and it often leads the direction of the S&P 500, especially at key turning points like it did, for example, in late Feb and indeed in January this year. On top of that, there are signs of near-term complacency in markets. Have a look at the VIX, for example. Yesterday it closed at one of its lowest levels since early 2020, suggesting that fear in markets is low and therefore equities are vulnerable to the downside. Equally, if we look at downside put protection in portfolios, it's been falling to reasonably low levels currently. The scale on this chart is inverted, suggesting that traders and investors are not especially worried about downside risks. For a full assessment of our models and for how we're trading this market, have a look at our daily trading publication. What are we watching today? Well, in terms of data out of the US, we get new home sales. Existing home sales came out yesterday, much worse than expected. We also get the Richmond Fed manufacturing index, and there's lots of Fed speak, including Williams, Brainard. We also get joint testimony from Powell and Yellen before Congress. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn and Facebook. Thanks for listening.